How's it, guys? Welcome back to FX Rhapsody. Today we're going to be doing analysis on two currency pairs. It's going to be the British pound, Japanese yen, and then also the British pound, US dollar. Before we hit the charts, just go visit my website. It's going to be on the bottom left corner over here. Link will be also in the description, where you can find some nice strategies, some previous analysis, also COT reports. Guys, with the COT reports, I updated it for last week basically, but this week's COT reports has not been released yet. So I'm just letting you know, I did not forget to update it or didn't have time to update it. It's just not been released yet. So I will be looking tomorrow to see if it will be released, and then I will update it again for you guys to use. Okay, so let us, before we hit the charts, and just go visit my preferred brokers. Go look at the brokers tab. These guys are absolutely brilliant, guys. I've had so many traders asking me, you know, what type of broker, what broker I'm using, and I'm just saying, just go look at them. It's on my website. The link is also in the description, because you always need a reliable broker on your side. There's so many, let's call it dodgy brokers out there, and I've been trading with these guys for years now, and really amazing support, leverage, margins, anything that you need from a reliable broker. So just come check them out. Okay, so let us hit the chart. So we're gonna excuse me, be starting with the British pound, Japanese yen. We're starting off on a daily, then working our way down to the hourly time frame. So on a daily time frame, we can see lots of movement, obviously last week's previous news events and stuff. But what we see here now is, I'm just gonna do that, we see a little bit of retracement. First of all, you know, there was a little bit of a fair value gap that was created there, you know, with that break in structure. For those of you that has not seen my fair value gap video, just go, you know, I'll put the link in the description as well. So there's a fair value gap that was created, and we can see that price eventually retraced into that gap. It did go beyond that, but just closing within that gap area. Also, if we take our Fibonacci, you know, from that swing low to that swing high, so it's a swing low, swing high, we can see that price basically nicely went into that 62% area right about there, you know, just tapping into that. So, you know, will this be a retracement for another buy upwards? You know, we will have to go to the low time frames. Always just, you know, we need confirmation if there's going to be any movement upwards. So you know, retracement back on a daily time frame, brilliant. So, you know, lower time frames will give you an idea to see what is happening. So on a 4-hour time frame, we can see this area being broke. Let me just do that. Previous low has been taken out. So we've got this low that was still intact. I'm just doing that. So beyond this low or below this low, there's obviously some liquidity that's lying here, and we can see price eventually going and tapping into that liquidity area over there. So excuse me. Again, you know, this normally when price taps liquidity, you know, you can see some movement to the opposite side, but we'll have to look. So on the hourly time frame, just getting my chart ready. There we go. So on the hourly time frame, we had, you know, the beginning of this week, basically, you know, that's those two lines, you know, normally on, or usually when I end my video on a currency pair, I've got two areas that I'm focusing on, or that basically the area of the beginning of the week that I'm focusing on. So you see these two areas in the market. So it was a low and a high, and we can see price, you know, going up, creating a big fair value gap over here, right? So you can see that this is the area that we're looking at. So price went up. Yes, there was a fair value gap that was created, okay, right about there. Okay, you can see price going into it, going up again, but we had some movement to the top and then going down again. So this was for me a sign of, you know, price just hitting a top there, creating a nice double top, as you can see. Okay, price going up and going up again. And then when I pull my Fibonacci, this was a sign for me for selling opportunity. So, you know, Fibonacci, very nice over there. So Fibonacci going down, retracement. So it's a swing high, swing low, price retracing to the 62% area, as you can see. Okay, so again, very nice sell opportunity that you could have taken right about there. And then price started moving downwards, and eventually, as we saw, price hitting that on a 4-hourly time frame, that low that was taken out. So where's your take profit? Okay, let's talk about that. So you have your entry that you took there for a buy setup. So where would you exit on this area? So I always say to the guys, you know, don't forget to look left. So if we go to the left hand side of our chart, okay, we've got all all these areas playing out. But yeah, look at this. Okay, this was, when was this? That was the 13th of October, around about there. So what is this? This is a fair value gap that was created in the market. Okay, that's an area in the market that was created. Now if we zoom out a little bit, you just make it small, you can see this area is still in play. So I keep these gaps in the market, these fair value gaps will always be in play. And like I've mentioned before in a lot of videos, is it's not always that price retraces back to that fair value gap immediately. Sometimes it takes time. Okay, so always keep these ones, especially the ones that's not been touched or retraced back to whatever. Those ones will still come in play on a later stage. So like this one. So we have that fair value gap, and if we move sideways, we can see price going up, coming down, not going into that fair value gap. So we keep it in play right there. Look at that. So we draw it sideways and sideways, and we see price going up and up and up, and eventually coming down. Okay, not in play yet because it is not filled that gap. Right, so then you move sideways and sideways, and bam, look at that. Look at how price retraces to that fair value gap, and that is your target area. So you have a nice sell opportunity at the top, and you have a nice target area at the bottom. Look at that, guys. So if you had to take that sell, you know, 500 pips done for this currency pair in a week's time. So always remember to keep your fair value gaps. There's a lot of them that will not be touched, but there is, and yeah, let me rephrase. There's a lot of them that won't be filled or touched immediately, but it will come in play at a later stage. All right, so always keep that in mind. So as we can see, price going into that fair value gap, perfect entry. And now we're waiting to see, will this be the area that price is going to start moving upwards? So I'm going to be highlighting, I'm just taking this out. So I'll obviously be highlighting this area in the market for this coming week. That's our low. So if price goes lower than that, we will react to the market. You know, be it a fair value gap that's created and retraced into, basically being filled, or will it be a Fibonacci? Okay, that's going to be a Fibonacci retracement that we're going to be using to enter. So I'm going to make a little bit of a bigger gap this time. So I want to see price going above this area. If it breaks above this area, it's going to be starting to tap into that highs that it was creating. All this liquidity that's lying on the top is going to be starting to take out that liquidity. The low, obviously, you know, we will react to what price gives us. So let's move on to our next currency pair, which will be this one. It's going to be the British pound, US dollar. We're going to be doing from the daily time frame. So let's just zoom out a little bit, and there we go. So on the British pound, US dollar, you can see price going down and then slowly but surely going up, taking out liquidity. So this was a previous high over there, price taking that out. Then it created another high, price going down, taking that out. Now eventually we see price taking out this high. So price is hunting liquidity. That's what price action does, right? So you guys, you need to learn price action because that is such a big part in your trading career. If you understand price action, your trading will definitely become better. So, and just go search on my channel. There is, I think there's a playlist as well about price action. Go watch those videos, guys. It will, I'm really, you know, it's going to minimize all these lines and all these indicators that you use and all that. If you know price action, you will see where price is going to be heading, what price is doing, and all that kind of things. So as we can see, price taking out the liquidity or the previous high, okay, the high that was created in September. So price taking that out, and now we see a movement to the upside. So going to the 4-hour time frame, just going to zoom out zoom in a little bit. There we go. Okay, so we have got a relatively closer high that was taken out. Okay, that's the one we saw just now. So that is an area in the market. The price went and tapped out. Come line, I like my lines doing straight. There we go. So as you can see, price just hovering or just retracing or retouching that area. So there was a nice fair value gap that was created over here as well. That was filled right about there on the 4-hour time frame. So that's a nice setup. Price going up, going down into that fair value gap, moving up, taking out that previous high, and then we can see a nice retracement on that high, and then price shooting up again. Okay, on the 1 hour time frame, we will see that fair value gap nicer. So I'm just going to go to the 1 hour time frame. Then we can have a look at that. So again, previous weeks, you know, or let's call it the beginning of the week. Okay, we had the two lines, nice little gap in the market. I did make a video about that. Price going and filling, obviously filling that gap. As you can see, price going up. So with that big movement upwards, let's do that. Obviously a nice fair value gap, a nice gap in the market that was created between these two candles, the previous candle and the next candle of that big push. As you can see, just moving it sideways, how price went into that fair value gap in the market. So as you can see, price going down, going up, and within that fair value gap, I'm just going to take that out, not to confuse it a little bit. I don't like to have too many lines, and you know, I don't like my charts being too busy. As you can see, price going down is in that fair value gap as we saw. Then we saw movement upwards, a nice retracement to the 62%. Look at that little touch. Look at that. Price just hitting that 62% line, and then it started to shoot upwards. It's a brilliant little entry. Then obviously taking out that lows, big movement. As you can see, big candle movement upwards. And then on the 4-hour time frame, we more saw the, I'm just gonna draw that in. That was our high. There we go. I'm just gonna do that. That's actually the high that we're talking about. Right about there. Okay, that was the line on the 4-hour time frame that I told you guys that was retraced and retouched. And with that retracement, because price broke that previous high, price going down back again and then shooting up. Okay, so just going to minimize it a little bit for you. So as you can see, price breaking that previous high, going up again, right about there, and price retracing to the 62% area. So we have two areas. This is a nice little entry as well. So we've got two confirmations. We have got this previous high. Let's just make it another color just to, there we go. And we just make it a little bit bigger. Okay. So we have got that previous high that price broke. Then we had a retracement to that previous high. Then the retracement fell nicely with a low, swing high Fibonacci retracement, 62%. So it's two confirmations of a nice little buy setup that you could have taken towards the end of the week. And with that buy setup, you would have been at least 180, 150 pip plus in profit already. Okay, so always look for these confirmations in the market. Look for those structures being broken, those retracements of the, you know, Fibonacci and all that kind of things. So we have got this high that we're looking at this week. Excuse me. Okay, and it's just reverted back to our normal black lines. So we have got that high. And then what I want to do is obviously this. Okay, that's going to be our retracement basically back. So we're looking at that. There we go. There's going to be a low in the market that we're going to be focusing. I do not think price is going to come back to that, but we'll have to look. So that area in the market we're going to be focusing on. And let's see what happens this week with this currency pair. Will it continue upwards, or will it start moving downwards again, you know, filling this big gap in the market? Because we do have a nice fair value gap that was created. That's a massive gap. Okay, so we'll have to look and see what price is going to be doing this week. So guys, that's all from my side. I hope you enjoyed this analysis, and if you did, don't forget to hit that like button, hit the subscribe button, hit the notification bell. There's going to be more videos coming your way, so guys, just, you know, stay tuned, And also just show me some love by hitting that super thanks button. You know, it's always nice to get some nice feedback from you if you comment, and let me know what you think. And also just going back to the COT reports, I will see if I can update it this week or during this weekend to see if the new COT reports get released. So guys, I hope you've been having a wonderful weekend. Stay safe and happy trading, guys.